John Meuret from Meuret Grain Company is our corn and soybean market analyst this week. U.S. farmers in 2015 didn't grow quite as big of a crop as the USDA was expecting. The agency's January crop report, released Tuesday, shows reductions in output for both compared to November's estimates. In its quarterly grain stocks report, the USDA said corn stocks on December 1st were up slightly from the previous year, while soybean stocks were 7% higher than 2014. We talked with John in Norfolk Wednesday afternoon and started by asking for his thoughts on the agency's latest set of numbers.
You know, not a lot of surprises, Jeff. We really thought maybe we'd be bearish and continue to push it down, and we didn't get that. I think it was neutral, and neutral, I think, was a little bit friendly because the crowd was leaning negative. So,
where did you expect the surprises to come?
You know, I thought we might build soybean stocks in the U.S. a little more. It came in about 440. I expected to push maybe a little higher. The crush is maybe going to be down. I think exports can be down a little bit. That's maybe the surprise I thought.
Further weakness in both exports seen yesterday?
Yes.
Because?
Well, I just think you've got the U.S. Overpriced, Jeff, and you've got Brazil able to perform. 4 or 5 years ago, they wouldn't perform, so the Chinese came to the U.S. and stayed here longer. Now they can perform, and so they're going to be in the driver's seat as long as they can continue to get the beans to the coast. So their crop looks good, moving ahead on you a little bit, and I think they'll be selling the majority of the beans in about 30 days here.
World stocks mean what based on yesterday's numbers?
You're going to see, first of all, we think Brazil's crop gets bigger and Argentina's crop gets bigger, and world stocks will build in soybeans. Corn's going to decline a little bit, it feels like. The consumption's good. Africa's got some problems, and I tell a lot of folks, it's not that we're not using corn worldwide, it's just that it's not coming out of the U.S. today. So that will change, Jeff, but it's just going to take some time.
Let's talk about funds, because that has been a storyline for the last few days here. Tell me where they are and why it matters.
Well, they're extremely short. They're extremely short wheat. They're extremely short corn. In fact, record if you add both those together. So they've really not liked the ag sector. So they've sold those off really, really hard the last couple of months. That's why we're into new lows. As they cover those positions for any reason, either not a negative report or something changes in the weather, you can have explosiveness. You can pop things 40 or 50 cents versus 5 or 10 cents. So it's important to know as a producer that the funds are on one side of the boat and eventually the boat tips over. So
what causes the boat to start to rock?
You know, just change in fundamentals, and part of it'll be if the funds find something more exciting to play in, maybe they'll want to liquidate positions there and go elsewhere. And when they do that, if they have to buy that many contracts, you will rally the commodities.
How quick is that turnover? How fluid are those?
You know, it just depends on what they're doing, but it can be as fast as a week if they get on a run, or it can be, 2 or 3 months, a slow, drawn-out affair. But generally, the funds will react quick.
The major support coming in corn and wheat, does soybean see it as well?
You know, beans, they're short, but I think the fundamentals in beans are a little more heavy than that. So it's a little more reserved on the front end today. They're not as short, in other words, as they are in corn and wheat. And so I think you'll see a little bit of that in beans, but not near as much as the other two commodities.
Let's go back down to South America. As you mentioned, describe the growing conditions down there.
Well, they were really hot and dry in the north. In fact, that was a spot that needed rain in a big way in Mato Grosso, and they've really picked up 5 to 8 inch rains in the last 10 days. And so it is exactly what the doctor ordered. In fact, you're going to see people talk about how it's too wet and they can't harvest probably starting any time now. So really good. Argentina, Jeff, is a little dry, but I think their rains have picked up a little bit as we speak and maybe going forward the next 4 or 5 days.
Are they out of the concern for weather?
Yes, I think today they are.
We usually talk around this time about boats starting to switch and go down there to get exports, but unfortunately Brazil has been really, really strong in exports all along. So does that still hold?
I think there'll be a little bit of switching, but really I think the switching will come right here in the U.S., Jeff. We'll move from the Gulf to go to the PNW. There's some problems in the river in the east with all the moisture. So I don't know that there'll be hemisphere switches. I don't know that it'll be South America to the U.S., maybe a couple spot cargoes here and there, but more of it I think will be logistics. And Chinese have taken a lot of beans in, and so I don't know that they're going to need to come to the spot market and get bailed out because there's a 60-day lineup in South America.
Do you have an impression that farmers are going one way or another with planted acres for corn or soybeans in your area this spring?
I don't think they know, Jeff, and what I mean is all of them are negative. And so if you look at wheat, if you look at corn, if you look at beans, I think it's just confusion. And so since the crop's been tucked away, I don't think the farmers really paid much attention to it. And I think he'll stick with some of his normal rotation and maybe refine that a little bit as we get closer to spring, depending on price.
I'll ask for your price forecast, but first, where's basis up there in the north?
You know, it is steady. Corn hasn't moved since harvest. It's about 30 under. Soybeans are still in that 30 to 50 under, whether it's to the east or the west, closer to the processor. So really, really quiet.
What would cause the elevator to move that?
Demand, Jeff. And today, and we talked a little bit on crush early when we talked about supply and demand, but the crush margin's not there. And so the incentive for the processor to pay up just isn't there today. It may be, but today it's an export story.
All right, tell me what your price forecast is for corn.
I'm going to say corn is going to be stuck between about 325 to 375 futures. And today we're kind of right in that range in the nearby. And in soybeans, I'll jump ahead here, Jeff, but I think soybeans are going to be pressed lower, 75 cents to $1 lower.
Meaning your selling targets are how far out?
I think any little rally in soybeans need to be sold. If you get close to $9 in November soybeans, I think you sell it. I think we're going to be cheaper than that, much cheaper than that. And that's what will hold the corn back as well.